Market uncertainty, a dramatic plunge in the stock market rattles Wall Street and Main Street. Is your retirement money safe? Is it time to look for other ways to save? We're going to talk to a local expert.
NBC 10 at Issue starts now.
Good morning, and thanks for joining us. I'm Erin Coleman for NBC 10 at Issue. Is my money safe? That is the question many people in our area are asking right now. Money they are depending on for things like college and retirement. But is the stock market just too risky for the average person? Or is now a great time to plow more money into your company 401k, your kid's college fund, or even start investing if you haven't in the past? With me now is Jamie Hopkins, Associate Professor with the American College of Financial Services. Jamie, thanks for being here.
Yeah, thanks for having me.
Always a pleasure to have you. All right. First of all, who needs to be concerned about this roller coaster we've been on with the stock market?
Yeah, so really the people need to be most concerned are people that actually plan on spending the money that are in their stocks soon, right? So people nearing retirement, you need to be more concerned about it. People in retirement or people who might be withdrawing money for college education expenses for their kids from a 529 plan. Savers, people who are investing for the long term, this is okay. You don't need to get too upset.
What are the ways the average person may be affected by this stock market volatility and may not even know it?
Yeah, so one of those is your 529 plan, your 401k plan. And you might think, why hold mutual funds? Well, mutual funds are made up of stocks for the most part. So as the stock market is moving, so is your 401k savings or maybe even your savings for your kids' college funds. What that means is if you get really uneasy about this, right, volatility is actually a great test or check on your risk tolerance. Do you feel comfortable being that much in stocks? And if the answer is no, you see something drop 1,000 points and you feel uncomfortable, it might mean that it's time to review what you're invested in and pick a better kind of allocation of stocks, bonds, guaranteed income to meet kind of how you feel about it.
So why is the stock market on a roller coaster, so to speak, right now? Is this a correction or is it something worse?
Yeah, so this is always hard, right? It's speculative. You can watch 10 different people and get 12 different answers. So one of the things is the correction term. You're probably going to hear that a lot over the next couple of weeks. That's really kind of an artificial term that was created, but it's really just to say, when has the market moved 10% down from its previous peak? And so we're in that right now. That occurs about every 2 years. Over the last 20 years, it's occurred 10 times. So that's pretty normal. Now, to understand whether or not that's going to go to something worse, only twice out of those last 10 has it gone worse than that. So that would be 2000, the dot-com bubble burst, and then kind of our larger market recession in 2007 to 9 time frame. Right now, there are some good explanations on why the stock market is moving up and down. We had a big tax law change. So some people thought that the markets might have kind of gone up a little bit high, kind of anticipating corporate tax cuts. And now they're readjusting once we see a law and can understand it a little bit better. So interest rate change is really the next big driver. Interest rates rising. There's some very good research out there. Actually, Bob Johnson, who is the president of the American College, has a book, Invest with the Fed. It's one of Warren Buffett's favorite books, too, and he always references it. But that has research to show as interest rates rise, stock values decline. Why? Because people move out of stocks into safer investments like bonds and CDs. So that could be driving a piece of this volatility now, too.
Is there anyone who should consider getting out of stocks right now? You mentioned if you're nearing retirement, but how close are we talking? Like, should I pull out right now this second?
Yeah, so we have some rule of thumbs around that, but if usually within 3 to 5 years of retirement and the first 3 to 5 years in retirement, that's almost kind of like a risk period, when that is really when you should have the least exposure to the market than really almost any other point in life. That's kind of the danger zone. So if you are a couple years out from retirement, it is a good time to sit down with an advisor, somebody who understands retirement income planning, and says, you know what, let's readjust your allocation. Now, also, it's important to realize that, from last year to this year, the market is up over 20%, right? So when we're talking about the market being down, well, it's down over a month. But over the year, it's actually up tremendous. So it actually is not a bad time for some seniors, people looking to spend this money soon, to readjust their investments.
Do people who are saving for retirement, are there other saving options that are as good?
Yeah, so once you're talking about retirement, really the focus switches from kind of saving and investing to generating income, right? That's what you need. You need cash flow and income. So then you are going to look at things like CDs, bonds, and maybe annuities, and that's not for everyone, but it is an option for people to look, taking money out of the market and putting it into a safer investment, making sure you're making good decisions about Social Security. That's an important one. That's another way that most people generate their retirement income. And then making good decisions about your company's retirement plan. A lot of them offer lifetime distribution options too, instead of holding stocks, and that's something for people to look at.
What about folks that are not nearing retirement? Kids are not going to college anytime soon. Is this the time for them to get in? I mean, are stocks on sale, so to speak?
Yeah, so some advisors and market analysts would say today's a good day to buy. When you have kind of 5% drops, historically you get back above that within a couple months. So you could say this is a sale time. It's a good time to reinvest. It's probably not a good time for a lot of people to panic and sell. So at least stay the course
Okay.
or considering just kind of continuing on the path, right? Put money into the market. Companies are strong today, which is different than some of the years when we've had corrections in the past. Job unemployment is low. Interest rates are okay. So we have some good kind of macro conditions that say, you know what, the market's pretty healthy all in all.
Jamie Hopkins with the American College of Financial Services. Thanks for being here.
Yeah, thanks for having me.